This is Cost Accounting, Chapter 9, and we are talking about flex budgets. So we're going to start with a comprehensive problem here. And this problem is going to start with Lavage Rapid is a Canadian company that owns and operates a large automatic car wash facility near Montreal. The following table provides data concerning the company's costs. For example, electricity costs are $1,200 per month plus 15 cents per car wash. The company expects that 9,000 cars will be washed in August and to collect an average of $4.90 per car wash. Prepare a planning budget. So a planning budget, like we discussed in the chapter, is a static budget. So this is the very first thing we do before August happens. We're going to plan August and what we think is going to happen based on our estimates. So we will take this information and we will label this planning budget for month ending August 31st. So we are going to just quickly format this. And the very first thing is we have budgeted car washed. And when we do this later, it's going to be represented by Q, because this is variable. But we're going to say we're washing 9,000 cars. That's our estimate. So then we have revenue. We're earning from the car wash, and that's $4.90 that's given in the problem, times Q for each one that we have. So it equals 9,000 times 4.9. Alright. Now we have expenses. Some are fixed and some are variable. So we have cleaning supplies, and this is 80 cents per car wash. And the reason I'm putting the variable numbers in here, that is because this times the numbers of cars washed. That's because when we make our flex budget, we're going to actually see what our actual results are, and then we'll make comparison reports, and it's important to know how you calculated this in the first place. So then we'll have electricity. And remember, some of this is fixed, and that's $1,200 plus 0.15 times the number of car washes. So that's what we're going to do here. Equals this plus this times our number of car washes. Yes, I want to close my parentheses. Alright, now maintenance is a variable cost as well. And maintenance is 20 cents per car wash. And all of that was given in the problem from the book. Exercise 9-8. Times our number of car washes. Alright. Now we have wages and salaries. And this is a mixed cost because some is fixed and some is variable. So we have 5,000 plus 0.3, so 30 cents per car wash. So equals our 5,000 plus 30 cents times our number of car washes. Alright, now we have depreciation. This is a fixed cost of $6,000, doesn't vary. Then we have rent. Rent, also a fixed cost Our rent is $8,000. And then our very last is admin expense. And this one is a mixed cost, some fixed, some variable. So we have $4,000 plus 0.1 times the number of car washes. So it equals this plus 10 cents times our 9,000 car washes. Alright, so let's add up total expenses. Sum the column of expenses. Put a little line over this. That's our total expenses, and our net operating income for our planning budget, which is static, we are estimating what we think is going to happen, is revenue minus expenses, or $5,950 for the month of net operating income. So now that we've done the planning budget, we're going to move on to exercise 9-9. Exercise 9-9 says, refer to the data that we just did on 9-8. The company actually washed 8,800 cars in August. And this happens all the time. It's very unlikely that you are going to wash the exact number of cars that you projected. So now we want to make a flex budget. So we're going to label this. Flexible budget. So this can be used to better understand the results that you have. So this is for month ending August 31. Okay. So this is going to be our flex budget. So we are going to use actual car washes times our budgeted numbers. Okay? And see what our flex budget should be. And this doesn't mean this is exactly what actually happened. So these are just actual car washes. And that's 8,800. And now, so our revenue, as stated in the previous problem, was $4.90 times Q. And we can actually link this sheet. And we can go back to our revenue. Actually, I didn't put the revenue in a linked situation, so I'm going to delete that. It's 4.9 times this. So this should be our revenue if we actually washed, which we did, 8,800 cars. Now, what would be our expenses? I'm just going to go over here and copy exactly what this says. So, now, and this is going to help us my setup, 0.8 times the 8,800 instead of the 9,000 that we had planned. And this equals 1,200 plus 0.15 so 1,200 plus 0.15 times the number of cars that we washed. Maintenance is a variable cost, 0.2 times our 8,800 cars. Wages is 5,000 fixed and 30 cents per car. Oops, no. I got a little ahead of myself there. Alright, we'll close our parentheses. Alright, now depreciation. There's a fixed cost on the previous page. and rent was a fixed cost from the previous page. And admin and selling expenses or administrative expenses is $4,000 plus 10 cents per car wash. And there we have that. Now for our total, we will sum this. And net operating income equals revenue minus expenses. We will draw a little line right here. We will draw a line right here just so it's easier to follow. And draw a line right here. Okay. So let me go back to 9-8. We projected 5,950. We didn't wash the same number of cars. We were 200 short of our projections. But we had net operating income of 5,280. So now that we've created the flex budget, now we want to have actual variances. So we're going to make a variance, activity variance report. So problem number 9-10 says, prepare a report showing activity variances. Refer to the data in 9-8. The actual operating results for August appears below. All right. So what we are going to do is make activity variances. So I'm going to copy my budget from here because this is my planning budget. So I just copied here. I'm going to put it down here. Okay. Because I think that's my formulas. I'm going to delete this because of the way I set it up. And I'm going to go back here and copy. And I'm going to paste my planning budget with numbers only, not formulas. There we go. Alright. So, the very first thing is I'm going to label this on top as planning budget. Okay. So I'm just going to quickly draw my line so that we can know where we're at. So at this point, all I've done is gone back to problem 9-8 that we already did, the planning budget, and I copied and pasted the planning budget right here. So, now that we have the planning budget, the next thing we do on the activity report is copy the flex budget. Okay, so flex budget we made here. I'm going to copy, and I'm going to paste only numbers, not formulas here. Because if we paste formulas, it'll try to link this out. So. Okay, so at this point, all we've done to create an activity report, this is activity variance for month ending August 31. So put this over this whole thing. Okay. So we've taken the information from 9-8, our planning budget. Then we created a flex budget, and now we've put them next to each other. Now we want to find activity variances. Activity variances. So now I'm going to take my flex budget and I'm going to subtract my actual budget. So revenue is $980 less. That is unfavorable. Because that's a revenue. But the expense side, if it's a negative number, take the flex budget and subtract the actual. I'm going to do that all the way down. That would be a favorable if it's a negative number on the expense side. Those are the same, so let's do this. That's favorable. We're $310 less in expenses. And so in the end, we're negative on overall income. That's unfavorable. So we made $670 less than we had planned. So this is an activity variance. Basically, we took the information that we made in planning budget, we took the information that we made in flex budget, and we found the difference between the two. So exercise 9-11, we had actual results for August. And this was right here. Copy, paste. So these were the actual results for August. So our flex budget was budgeted expenses, but actual cars washed. Now we're going to see what happens with actual expenses, because not all the time are expenses exactly what we think they are either. So we're going to cut this. This is the information given from the book, and it is actual expenses. So we're going to call this column actual results. Okay. And if I could spell, it would be so much better. Actual results. We are also going to take our flex budget results from 9-9. I'm going to put those right here. Right here, make that little line. Okay, so this is my flex budget. So flexible budget. Now we want to find the variance between actual and flex budget. All right. And this is called revenue and spending variance. So the first one, when we made the flex budget, that was variance based on volume. This is variance based on revenue and spending. Alright, so let's check it out. So we are going to take our actual results, subtract our revenue. Okay, so our flex budget, we didn't actually make as much money as we should have. So we have a revenue variance, not based on volume, but actually based on revenue. And let's go down to actual results for expenses. So cleaning supplies were $520 more. So that's a spending variance. Not good. Alright, some of these are out of our control, as we know. Electricity, $150 more than we budgeted for. Now electricity is a utility, so the actual cost could be more, purely based on the fact that it changes. Maintenance was $500 more. So far we have lots of unfavorable spending and revenue variances. $860 more for wages and salary, even though we didn't do as many cars as we had planned originally, right? But this is purely based not on variance in actual results. It's based on spending and revenue variance. So this takes away the fact that the volume was different than we thought it was going to be. There shouldn't be a variance in rent, hopefully, or depreciation, because these are fixed amounts. And the very last one. And that's an unfavorable. So let me add this up. We have this actual results. So total costs were $2,100 more, and revenue was $40 less than we thought. So if we have higher costs and less revenue, overall our net profit should be less than we had budgeted for. So $3,140 was our net revenue, but we had, based on our flex budget, if we had done 8,800 cars, we should have come out with $5,280. And this is also unfavorable. These are all used here. So the very last step in this is to take all this information that we found and put it into a flex budget performance report. So the company. Flexible budget performance report. And that's month ending, for month ending, August 31st. We're going to make bold. And this is going to bring together all of the budgets that we did. So we're going to put a planning budget here. This will be our first category. Then we will have activity variances. So this is based on the level of activity varying from what we thought. Then we put our flexible budget. Then we put revenue and spending variances. This is cost actually being different and revenue actually being different than we thought. And then we'll leave a column for telling whether that's favorable or unfavorable. So actually we'll put a little insert here. Make these all bold. I'm just formatting here. So we need a little column right here. We don't need this one for F. And then we need a little column right here. And then we need actual results. Alright, and I'm just going to format these cells and wrap the text. This doesn't get so out of hand here. Alignment. Alright. Yeah. So, I'm going to go over here. I'm going to copy this information here. And I'm going to call this top one cars washed. Reason being is because since we have our planning budget in here, we will have a difference here. So let's put our planning budget here. Again, we can just copy this information that we made. Copy. And then I'm going to, not on page 6, I'm going to paste it, just the numbers here. I'm going to format. So this is my planning budget. our activity variance. We found this on 9-10, correct? Copy. I'm going to put that right here. I'm off a row here. And this isn't dollars, this is card washed. This is dollars. Then we are going to have our flex budget, which we did right here. Copy. So realistically, I'm just copying this. We've made calculations in some of them, and then we're kind of copying the information over and making calculations. So then I'm going to take my revenue and spending. Let's not copy this one. Copy. Paste. I'm going to format this as dollars. And remember this is cards. And then very last thing, I'm going to take actual results. Copy. And I'm going to paste. Alright. So I'm going to do this. I'm going to format our lines here. And this is a flexible budget performance report. So it basically compares everything that we just did and all of these activities. So this is a whole chapter on flexible budgets, activity variance, revenue and spending variance, and how to put that all together in a performance report.